If you came to this market to make money, you need to know that the market is showing you this right now. In general, compared to the last market cycle, the current cycle is an extended one in all terms. Yes, I agree, extended bull market is a great news. But here is the catch. We may have extended corrections and extended consolidations within this extended bull market. And how many of you guys can stand tall when that's happening? BTC shows you that it has been following a similar pattern or similar trend, or you can say BTC is doing this, so they also are following that, whatever. But the market cycle is rhyming like this. So what if we put that into perspective for XRP? If we are going to get that average of altcoin market itself, it's kind of extended. And the signs are we had 300 days of bull market last time. It can be 400 days this time, but still that shows you that it would not be that much extended, but chances are we may still go a year more from here. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. I know that there are guys who would highlight that this is not going to happen if you are saying a year more of a bull run moving to the upside and XRP going to hit 100x from here. Many would say the market cap is going to be so high. So this is what I would like to talk about. That remember, if governments across the globe can print $20 trillion in 1 year, that's a red flag. If they can do that, if they can then create money so easily like that, just the value is going to drop, that's for sure. Look at this, IMF put this one out, and that's so timely, right? It's on time, because right now, you look at this, the inflation rate is something similar to what we had back in 2008 during the great financial crisis time. And then look at countries with high number of inflation. These are in percentage and recent updates, right? You're looking at Venezuela, Sudan, Zimbabwe, Lebanon. Now that's not only one or two countries there, which have in double digits, right? So if some of them are gonna go out of hand from here, they may just spiral in a situation where the dollar is devaluing, governments are printing more money, they can't do much. And that's why in this duration you're gonna see goods and asset price inflation. Now that would show you that market has been targeting or looking at this from some time, because the money printing has been continued during the health crisis, and this points out that yes, your purchasing power would be stable and it would go up with the inflation if you are in an asset which cannot be duplicated. So right now, if you are in crypto market, yes, there is a lot of opportunity. You need to understand that one, right? So let's dig in through these charts and understand what the charts are suggesting you. What was the timeline of previous consolidation which happened in the recent past, right? We can look at couple of them and what happened during that time. So these are all indications which suggest you that this is going to happen. Now what is that? It's that we are still in a bull market, which is an extended bull market. Now let's see the factors affecting that one. As we talk about multiple aspects of XRP, say this is a weekly chart of XRP. This kind of shows you that the long-term rising trend line support is kind of still valid. We are still slowly moving on that one, but MACD is kind of crossing to the downside. The volume just went downside, but MACD lines are still in positive territory. So that's like it may need to go back a little bit down, get that breathing space, then move up. So that's a consolidative phase which we had here, even though it was so close to that negative territory or the neutral, then the negative, it came down, consolidated and moved higher. So if you look at this trend here, last time it did it once, twice, hopefully it's going to do a third time, because that's how we do in investing. You look at the history, try to forecast the future, and then allocate your money based on that one. So now look at this one. As long as you're holding above this particular support, this is the previous high, so this low is staying above this. That means a lot of bullishness in the market. Now yes, you need to actually look at all of different stuff, right? See, first time when the 20-day moving average crossed the 50-day moving average, the market kind of consolidated around 112 days. Even though it's a bullish symbol, it needs patience, right? The time it crossed was somewhere here during this correction and consolidation. So it was like, say, 70 days more after the 20-day moving average crossed the 50-day moving average. Now you're getting even better that it's 50-day moving average, which is crossing the 200-day moving average to the upside, which is called as the golden cross, right? Now the price came back. Before we were going towards this, I told you, whenever you are going to get that, chances are high you are going to come down. Now look at this, 20-day moving average crossed the 200-day moving average here. It was close to that. The price came back, it crossed, price came back, retested that and bounced. So now the 20-day has already crossed the 50 and 200, confirming that we are in a bull market. Then right now, if we look at the market, 50-day crossed the 200-day moving average and is still trending higher. So when all of your indicators, the moving averages, are pointing to the upside, ask yourself, should you be bearish? And they are just turning to the upside, right? Look at the 200-day moving average, look at the 50, it's just starting. So when the market cycle itself is starting and you're staying above a long-term resistance line, making that as a support, now you have a ton of questions to ask. Last market cycle was like 1,500 days. So if you plot this one, now where did you actually get this? You come here, look at this. This is altcoin market cap on a weekly. So when you are looking at this, it's like 1,500 days from this top to this top. Fine. Now you plot that one again, this top towards a new top, anticipating 1,500 days. Now we need to understand what are the deviations which we are having right now in this market cycle compared to the previous one. So say from this top to the bottom here, we had 266 days. Now, if you look at the similar pattern from the top to the first bottom here, it's 336 days. So that's like last cycle top to the capitulation 266, and the current cycle it's like 336. So that's around 30% more time taken to reach that point. Now look at the next one. Here in 2013 cycle, from the top of this previous cycle, we took like 742 days to the start of the bull market for the next cycle. The wave one start day, right? Whereas this time, it kind of took us 917 days. Now you would be asking, okay, how would you even plot that? So now when you come here, you need to understand this range of consolidation, we broke higher here at this range. So that's here. You did the double bottom, you broke higher, confirmed that change in trend. And that is another 30% more in terms of time taken. Now, each of these stuff give you that idea. Now again, from the top of 2013 to the retest of the same top, it was in 840 days. Whereas this time, we came there by 1134 days. That's 1134 days. So that's again another 30% in time extra. So now you're asking the question, okay, then will the stop come here in the exact same time of 1,505 days or 1,500 days? No, chances are higher that it may also be 30% extended. So that's why we're taking this. 30% is 450 days, and if you want to plot that, you can kind of put that into perspective somewhere here, and it get extended towards early 2023. Now understand, that's till the top of next wave, right? So we are looking at wave 1 here, we are looking for wave 2 and wave 3. So by the time we top out in wave 3, it would be somewhere here, maybe late 2022 or early 2023. But remember, the major gains are taken here in wave 2. So if you are someone who actually entered the market a little bit before, not the exact bottom, but somewhere in between the wave 1, you are going to still get a ton of profits if you remain in the market till we do reach the wave 2 top. If you are someone who is entering the market now, yes, you may have to go through the wave 2 and see the profits, and if you're happy with it, that's great. Otherwise, you'll have to enter into wave 3, and that may take more time, right? If you are looking at the structure, you will understand that we consolidated like around total of 250 days after wave 2, and by the time we reached the top of wave 3. So in this upcoming 400 days added here, you need to understand right now we have around 350 days more to reach there, and then we have 440 days. That's a long time, 2 years. But if we are going to think that 300 days of it is going to be the consolidation after the wave 2 and move in wave 3, you may not need a ton of time to reach that range. You may reach that range in between this. So by 1 year from now, 1.5 years from now, you're going to reach the top of wave 2. So that's going to be massive gains in some of the assets. So you can actually put that into perspective and look at like how much it has done. Now, even if you're being so much of a conservative guy and just thinking, it's going to be just basic, remember, it's just going to be basic gain in the Elliott wave structure, you're kind of pointing your fingers towards right now. Say this is one cycle of the XRP, and if you are looking at this, we went till 16x. Now if we are really going to start the wave 2 from here, that's going to be a massive rally. 2 to 3 times this one is like 32x, and your bottom was like this 0.65. So say you're going to do 32 to 48 times of that. That's way higher, like 20 towards $40. That's not a bad deal in top of wave 2. Now, yeah, again, people will jump back and say, what would be the market cap of XRP at that price? Now, that's why I'm saying you need to understand asset prices, goods, and everything is being inflated right now, and look at the rate. You need to understand that it's not the 4% or 3% which you see in the developed countries. You are having a ton of nations which are moving towards 2-digit inflation, which are moving way higher. You have countries which are in 3 digits inflation. So all of these need to be considered. If the inflation rate is moving like this for next 3 months, it's going to spiral out of control, that's for sure. And that means people don't want to keep their fiat in bank. They would put that into any different asset which they can easily access, and that's what is happening in the market when this is pointed out. If you have, say, $1 million in cash, you wouldn't be holding that during this inflationary period. Now, it depends how you view the market. And there are confusions when you look at the market itself, and Warren Buffett is holding a ton of cash, and at the same time Charlie Munger is saying, we are going to get a ton of inflation. The value is going to be going down. So that's conflicting information. But understand, they are also looking for major gains or a sale price, because they have also moved into gold miners. So they have seen this previously. They understood that this is coming. So the goods price inflation is not a bad stuff, and the asset price inflation is not a bad stuff for those who are prepared. For those who are not prepared, these are going to hurt them really. Now, let's actually zoom in to a 4-hour chart of XRP and look at what it's showing you right now. Meaning, what is the possibility for next couple of months, say at least. Now, when you do analyze short term, the validity for that one or the accuracy would be lower. But as you move back and look at the long-term chart, it increases your accuracy rate. Now let's look at this. The 4-hour chart of XRP is showing you that the price is still trending lower. Now that's from here, not considering what happened, with XRP price before that, right? So now you're looking at the price like this. Okay, fine. Each time when you're going up, you consolidate there a little bit, you come back down, right? So you are kind of looking at the same stuff here. Now here, if you look at this, we kind of created a lower low here, right? That was not something we were anticipating, but if you look at that low, zoom in, you understand like you went down but immediately came back up. So that's kind of a fake out symbol there. So if this is your support resistance territory where you're aiming to see that this is going to hold, it is kind of holding. It went back to that support and it's being bought back up and it's moving up. And at the same time, in the RSI, you are seeing a possible inverse head and shoulder. Usually that's a bullish signal in the market. So now on a 4-hour chart, you're kind of zooming out a little bit and looking at this. Okay, it can be a bearish continuation pattern. You were coming down, you got this one, so the chances are high you may go back to this level. But that's when you look at the chart on a shorter time frame. So if you understand the range of these candles, say this is crypto, right? If you're looking at crypto, the movement is really high. If you want to look at the movement in crypto, you can just go and take the average true range, which would be ATR, average true range, and then come on. So it would be better to look at it on a daily, because on a daily, when you keep it here, you're going to see at the bottom here, when you're placing it, you can see a number here, right? So now look at it. It's like 164 pips. It's like 200 pips. So the movement in the market on a daily is like 200 pips. So then you move into a 4-hour chart. Fine. Then what are you watching here in this market? It's like 20 pip, 25 pip, 40 pip. You know, rarely the market actually does that 60 pip, 70 pip move. So what do we understand by this? If you didn't get that clearly, I'm going to confirm that. Say on a 4-hour chart, which is a short term, you're going to get around 30, 40, 50 pip movement on each candle. Now, when you step back, you kind of see 200, 300 pips fluctuation in the market. That's not small stuff. That's a huge change in the market deviation. If you don't get my point here, I would suggest look at this again. You are getting like 200, 300 pips of movement. You are getting, say, an average of 200 pips movement on a daily. And when you step back on a 3-day, you're getting 250, right? You're getting, it's increasing. Now, remember, as you step in, zoom in, you're going to get lower number. It's 30 pips, 40 pips, 50 pips, they max, right? So the average, if you say, is like 30 pips. So if you're trading this market and keeping your stop loss, considering just that 30 pips, understand this, on a daily, the fluctuation there is 200 pips. That's gonna hurt you if you don't understand this, and if you're trading, keeping your stop loss there, because I've seen some members, you know, doing stuff like this where they don't understand this scenario. They'll keep their stop loss just below the recent low and trade. If you are trading that, fine, you need to keep your stop loss below the range. Otherwise, you're going to be stopped out and the market is going to move higher. So do you actually want that to happen? Because as of now, if you are looking at this, you also tend to see a possibility like this. Now, this is not confirmed yet, but yes, this certainly looks like a possibility in the market. Now, by the time we come back and retest this level, it's July end. It's early July. And by the time we break out after retesting, it would be even August. So that's a couple of months to go higher. Now, why do we say that's a possibility? Because in the recent past, we have done something similar. We have actually moved. We created that. Now, if we put the same pattern here, it would be something like this, right? So you are extending yourself into the August range when we are moving higher than this. So if you have patience in this market, you are going to make it. Now, if you don't have that patience, it's going to be really hard for your portfolio, because you will have to exit this market in red or a little bit of profit instead of getting to a ton of profit which the market is offering you. Those who remember this, there's a monthly candle, and on a monthly, you are right now looking at your 20-day moving average crossing the 50-day moving average to the upside. And as I've shown previously, whenever a moving average is going to cross, say here it was crossing to the downside, but the price came and touched that level, right? Then it went down, it created the new low there. Right now, you're going to cross to the upside and the price is coming back to test this range. Fine. So just before that, you came back and retested that after this pump. Now you're retesting that to move higher. That's usually what's happening in the market. So now when you look at this, we've been talking about this long-term pattern, not the short-term pattern here, the long-term pattern. And then you understand how the momentum in the market is moving. See, right now you look at this, it's now, just for you guys, I'll clear this stuff here and then show you. First, this was the trend line, right? So that was the movement there. Now, this is the trend line. You're moving higher. So what's the difference there? If you want clarity, you can actually take the trend angle and see this at first was like 12 degree. And right now, the market is kind of moving in 50-degree angle. That's not the precise stuff. You put it here. Okay, I'll take that out and put it here. Yeah, you get kind of 50-degree. So what else do you want from the market? 90-degree to the upside? That's going to be difficult. Now that happens, right? So you go back in history and then, just get this picture here to understand what was really happening during that bull market, 68 degrees. So yes, that's possible to increase your momentum again from here. So now, if you are someone who's having a ton of different assets in this asset class and you're looking for similar updates about what this asset is doing, where in the market cycle it is, and what can you understand from the cycle of that individual asset, because this is the average altcoin market cap and the average is like 30, but some assets would be doing like 60 and some would be doing like 20. We don't know, but we need to understand which asset is like 20% more, which asset is just 10% more time. That means it may not get extended towards 2023 for that particular asset. It may end early and go down, right? So you need to understand all of this within this wave structure to understand whether that's stopping out and entering into a bear market, right? So for that, we do update on asset basis. We try to give you almost every assets which most of the members are trading within a week. So if you look at a weekly update here, on a daily basis, I'm going to put charts updating you what that asset is doing, what you're looking at, all the different stories within the market, because you need this to understand what's happening in the market. If you are looking at all of this, you're going to get a ton of information. And if you want all of this, you can look at the Patreon. The link is given in the description below. And if you haven't clicked that like and subscribe button yet, please do support the channel, hit that like and subscribe button. I'll meet you guys on the next video. Bye for now.